Okay, that's easy. All right, so let's do this. All right, I just marked this as the official beginning of our live stream. Happy Monday. I hope you had a wonderful weekend. Okay, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. In fact, more than 21,000. Just think of that small difference. Imagine 21,000 people. That's like fills a football field. That's pretty good. You're like, well, only a regional football field. Okay, well, a regional football field. So thank you for the loyalty and respect that you show me every single day. I appreciate that. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Wow, I kind of look like a disaster this morning. Hey, that's all right. My day it's almost lunchtime for me. Look at that. What's going on here? Yeah.
So just taking a quick look at FX markets at the moment. Dollar yen reaching levels above 148 in recent trade. So the pair has been moving higher since APEC hours. So yeah, dollar yen just topped 148 in recent trade.
Sorry, that's my new Squawk. That's my new Squawk. Yeah. Cool. Yeah, that goes 24 hours a day. Very cool. So anyways, hey, so what I propose we do today is some gold, some oil, some Bitcoin, dollar, yen. I don't know. What do you guys want to cover? Let me know in the chat. If you're new, please subscribe. And when the recording is done, would you leave a comment? I appreciate that. Just a comment, even if it's just say hi. It'd be great. Well, we usually get 50, 60 comments. That'd be cool. If we can get some more, that'd be nice. That just takes just a couple of seconds on the recording, just to say, hey, what I think you should do is comment, not just leave a comment like hi. Okay, that's good enough. But you should document what you learned and the timestamp in which you had learned it, whatever the topic was. Okay? So therefore, you can search your YouTube comments in your YouTube account and then pull up specific videos with specific timestamps that you can jump to relearn what you learned. So if I talk about the importance of seasonality for gold, you can timestamp that and say gold seasonality at this time, and then 3 years from now, just type in gold seasonality in your search in your comments, pull up that particular video, click the timestamp, and it takes you right to that. So it's actually your video archive. That's what I would do if I was me. But supermodels think differently. We're a unique crew. Champagne and limos all the time. Are you talking about QuantBox? Will quantum service on TRADARS be free? Well, I'm a capitalist. Nothing is free. Because I have to pay for everything. So, yeah, but what do you mean quantum service? I think you're thinking QuantBox, right? Will it be free? No. You couldn't build it for $1 million, so it couldn't be free. All right, cool. Cool. I'm looking to purchase it soon. What I can tell you is I'm about to launch TRADARS, fully integrated. It's at the point where it works. Now we have to integrate all your memberships from the other places, right? But for those whom choose to move over to TRADARS, for your QuantBox, for example, or for, let's just say if you're a subscriber to everything, Investor Bootcamp, day trading and swing trading, QuantBox, and the TRADARS that does technical analysis. If you subscribe to all of that, you will save a minimum of 17%. Right off the bat. So that you'll be incentivized to move over. Now, TRADARS is going to be better than Investor Bootcamp just with the stuff that we've already integrated. So it's going to be better. But I got some like aces up my sleeve. So if you're that person, you're actually going to get some cool new stuff. Everybody likes a new free bonus, right? Okay. So anyways, yeah. So yeah, that's all happening. But here's the thing. If you only want QuantBox, you're going to go to QuantBox. You can sign up for QuantBox. Great. QuantBox is great. And for now, you'll be able to log into QuantBox. For the near future, I got some other things going on with QuantBox. But you will also be able to log on at TRADARS and only access QuantBox on TRADARS. You won't be able to get the other stuff on TRADARS. So what's happening is when you sign up at QuantBox, or if you've already signed up at QuantBox and you've been at QuantBox for a year and a half, well, you'll be able to access QuantBox on QuantBox, but also on TRADARS. And then in the near future, we will not be selling any new subscriptions at QuantBox. You just can get QuantBox over at TRADARS. Yep, you see? But you won't be required to cancel one and sign up on another. I won't ask that of you. $2.99. Dr. Dre. Yeah. So it'll be cheaper. I think when you add them all up, it's like $356. So you save something like $57 a month. And then there's an annual that you can sign up for, Dr. Dre, that saves you even more. Yeah, because you're committing. And I'm already committed. Like, I'm way deep committed. I'm committed, like going crazy committed. Yeah, I'm so committed, they have to lock me up. All right, so anyways, so that's that. So let me know what you want to cover today, and we can do that. All right, how many people would like me to cover the stock market? Yeah, it was a good day, Dre. Didn't even need my AK. Wait, that was Ice Cube, not Dre. Sorry, my bad. You should get that. It's designed for you to should get that. All right. Okay, who wants me to cover the stock market? I have Dow, S&P 500, and NASI, but I also have global stock market, which for some reason I changed to a yen. I think I was showing correlation. But I have Hong Kong. Remember, I showed you there's some up developing, and it popped up for the last week. So we have to see how it's going to deal with the 21. So anyways, I watched the Chinese stock market. I watched the Australian stock market. I watched the Japanese stock market. Okay. And this could be what? What do you want to put here? Euro 50? Isn't. Here we go. UK? How about FTSE? Let's do FTSE. Isn't Trader's Way awesome? Lovely. You know, Al, does new TRADARS allow us to buy individual courses? No. But will that be in the cards in the future? Yes, but not TRADARS. Okay, so I'm going to turn Investor Bootcamp into Netflix for investors. Because if you're like, dude, all this other stuff you're doing is amazing, but I don't get it. It's way over my head. Give me 6 months to a year to get trained. Cool, I got you, son. Okay, so that's the plan. All right, so which stock market would you like me to start with? Nazi? Anybody else? Nikkei? FTSE? Oh, we're going to be here a long time. Well, while you answer that, let me give you an update here. I'm not going to be able to live stream on Forex.Today or on FX Street Thursday and Friday. I'm flying to the West Coast to do work for a nonprofit. Specifically, I manage now multiple endowments, actually 4. And so anyway, so I got to go take my money brain and donate that to the greater good to make the world a better place. So I will be on the West Coast. I'm bringing tarps and shopping carts with me. Yeah, I'm going to sleep under a bridge. Yeah, cool. It's hard to get that onto the airplane, though. Yeah. But anyways, yeah, kind of looking forward to it. Yeah, I will fit in well. Yeah. Maybe I'll bump into Kamala. Everybody knows her, apparently, to her. Actually, that part bugged me. Like, she was presented as a Silicon Valley leader because she's from the Bay Area. And I'm like, I lived in the Bay Area, in the South Bay, on the peninsula, and San Francisco. I was a high-tech entrepreneur. I raised millions of dollars. I knew hundreds of venture capitalists and angel investors. I don't know anybody from San Francisco, the peninsula, or South Bay that had ever been to Oakland. You steer clear of the Oakland. And she's from Oakland, and I'm like, I don't know anybody that went over to Oakland. And I lived there 20 years. So I don't know if she knew anybody. I'm like, what are you talking about? Oh, well, Oakland's in the Bay Area. Yeah, well, the Silicon Valley ain't over there. It's very much on the other side and away. San Francisco South. Nobody crossed the Bay Bridge. So anyways, it's kind of interesting. I'm like, really? But the media does that. So I'm not blaming her. The media does all that. And very often the media doesn't know what they're talking about. But maybe I don't know what I'm talking about either, right? Oh, why am I going to sleep under the bridge, Al? Because everybody in California. You're not cool, Al, unless you are homeless. Everybody wants to be homeless. Yeah. Homeless is the new millionaire. So, like Al, when I lived in San Francisco in the 90s during the dot-com days, money poured into places like San Francisco. So I lived in San Francisco, and I have nothing but fantastic memories about San Francisco. And it was an entrepreneurial renaissance. The nightlife was lively, and money was pouring in. So like industrial neighborhoods and worn out neighborhoods were getting all fresh new money, and construction was being built, and old places were being renewed, and there was a vibrant energy in the people. We were changing the world and making it a better place, and everyone was open-minded and tolerant. San Francisco is known for its diversity in many different ways, and there was never a problem about anything. And you'd go to these different parts of the city, and the old places and the new places and even the touristy places. It was just awesome. And now there's just abandoned neighborhoods, Al, and homeless people. Hordes and hordes and hordes and hordes of homeless people. Apparently, crime is through the roof, and people can't sell their homes because nobody wants to live there. You're like, oh yeah. And I even though I'll be nearby, all my friends say don't go to San Francisco because it's going to ruin it. I have nothing but positive memories, and it'll just shatter them if I go see it. And so, anyways, I'm going to go in and out. I'm going to be stuck in meetings inside of corporate offices. So anyways, there you go. So that's my bad jokes. So the stock market just opened, everybody. Let's start with the American ones, and then we'll zip over to the U.S. ones. To the foreign stock markets, okay? Let's start with the S&P 500. And we're on the 4H, okay? And we're riding up. So as you probably have already done, you recognize the high, higher low. And you're anticipating a 21.55 to the up. Let me give it a little click in here. But the velocity of the drop is what's scary, right? Notice that the way I teach you, and more particular in sort of the newer language that I use, okay, sometimes, should, and always. These are outs. Probably, should, always. And notice that we did bottom out there. So we have a higher high, higher low scenario, and it's trying to head back on. So if that happens, then we're on a risk on scenario, which means this drop of certain recession, hard landing.
Just some BCB commentary here from Campos Neto to say that they have been very concerned since last year about global fiscal concerns and liquidity extraction. It says this is starting to impact financial markets and that they need to live with this effect in the coming years.
By the way, this is a Squawk that I'm testing out. I used a Squawk service for 10 years. And to be frank, I just missed it. And I missed having a Squawk service of real-time coverage of all the financial markets around the world and geopolitical risk and bond sales and earnings reports and all these things that I kind of miss because there's just so much news. Well, to have it just coming in real time is very, very, very helpful. And this is the service that I'm testing right now. And so far, so good. One of the things I like is the simplicity. When you get to some of these reports, they give you just like the quick and dirty 1-minute read. You don't get the 9 pages that you have to review. It's the quick and dirty, in and out in 30 seconds or less type stuff. But it's also, like I said, geopolitical stuff. But like, oh, someone from the RBA said something. Really? And here's the quick and dirty on it. You see? You might have missed that. It was Sunday night. But you got the quick and dirty. Okay? I like that, but you have the audio. And so there's a team of people watching everything 24 hours a day, 7 days a week. So what I'm thinking is I pay quite a bit of money. Imagine you have 6 or 7 people watching the markets 24 hours a day. You have to pay for those people, right? It's expensive, right? So it's not a cheap service, nor could it ever be.
Just a bit further remarks here from Brazil's Campos to say inflation in Brazil has recently increased a little and core inflation is relatively well behaved.
So they're watching the Central Bank of Brazil. Oh my God, I love it. So anyways, it's very, very expensive, but I can integrate it, pay a whole bunch of money to have it integrated into TRADARS, and you would be able to contribute to the cost at a very, very, very significant discount because I'm paying all the money up front versus you doing it yourself. Meaning you go to Squawk and you're like, oh, I love this service. Well, it's very expensive. But if I pay for 100 seats, I can get it to you. But the thing is, do you want it? I want it. I want to know if you want it. Okay. Cool. All right. So let's go back. So, by the way, so if you hear this guy talking, I'll let him talk, and I'll just check. All right. So now we go to the higher time frame, though, and this is what's going on. So you kind of want to try to mark this. I don't know if I can click in. I can get one more click in, and then I'll show you that we do have a crossover developing. And that's longer term short, but it's too early to short yet. But you might look at today and tomorrow as opportunities to look for a short. Okay. Now, I covered this last night in the day trading group. And so we're already well aware of these forces of the short term up. Okay. Short term up to long term short. Okay. Which one's right? The thing is, you're asking the wrong question. They're both right. The other thing is, you can't ask me what the future's going to be because I don't know what the future is. So all I can say is, well, what's your bias? What research have you done? What supports your opinion, and what would reject your opinion? And if you can't form a thesis around what you're doing, you are not a professional trader. You're an amateur. You don't know what you're doing. You're just reacting to everything, or you're guessing. There is no right. Okay? There is no right. You have to make a decision. Are you a long-term bear? Well, technical analysis is pretty clear. Okay? But that might be incorrect. How do you know? You don't know. That's why you use a stop. And so right now in the shorter run, we're kind of in here, aren't we? Yeah, well, that's a day trade. So what if the next move is down? Well, we call that a swing trade. Long-term, short-term long, long-term short. That's cool, right? We're also in the middle of summer. We just had a massive unwind. Central banks are adjusting policy or expected to adjust policy. I mean, the ECB is going to cut 6 times in the next 18 months. Gee, Jiminy Cricket. Yeah, so there's a level of complexity. What I want you to realize, and this kind of goes back to Angel's question and comment earlier, and I hope you don't mind me pointing that out, Angel, but it's just this idea of it's the worst trading month of the year statistically, and we have changing policies all over the place, and we have leverage unwinds going on. And you're like, well, I can't catch a consistent trend. Well, there isn't one. So part of your process, so then Angel followed that up like, well, what's the daily process? Should I use QuantBox and then use TRADARS and all that kind of stuff? And the answer to that is yes. So let me tell you, I'm a bull in the stock market. I'm going to buy and keep buying. Does it have to be today? No. Am I going to be a bull tomorrow? Yep. Well, what if we go into recession? Or am I going to be a bull? Yep. This week? Maybe, maybe not. Next month? Maybe, maybe not. In general? Yep. So what do? Beyond that? Well, I keep abreast of all the changing macroeconomic conditions. And maybe I'm wrong on that. Maybe the stock market's going to drop 75%. Don't think so. Well, maybe it'll drop 50%. Don't think so. Well, maybe it'll drop 25%. Maybe. Okay, maybe. But I'm going to buy down there. Oh, okay, great. So when does that usually happen? Why would it usually happen? What would counter all of that? And then how would I know it is time to buy? Well, if I'm always a bull no matter what, then the rest is, as long as I have a bullish bias set on true macroeconomic conditions, then the rest is just a chart. A chart? Well, shoot, that's where I started with. I'm like, that's the easy part of trading. So now all I do is buy higher lows. Well, how easy is that? Huh? How easy is that? So let me ask you. Is this a higher low? Let's do that in black. Please answer, everybody. Is this a higher low? Please answer. No, it is not. Kevin says, could be. Well, I could be profitable. Right? Well, look, dude, if you were going to buy it, and I mentioned it at the time, and I said I don't tend to do this, and this was even more dramatic on other pairs, in particular like yen pairs and stuff. But there is a counter trend trade that I recognize and I teach, but I rarely trade. But if you were going to be the degenerate gambler, it would have been here. But even then, it's not a forever up. Okay? And the problem with this type of move, I want you to understand that it's only partially fundamental. There's a bunch of other stuff. This was part of the unwind. As you know, as this fell, this had everything to do with the yen's falling. So this this sort of is related, but sort of is not related. But let's get to it. Okay, let's get to it.
Just making you aware, stocks are pulling off highs they saw earlier in the session. E-mini S&P is now down about spot 2%. Nasdaq is down about 50 points, or about 0.3%, and the Russell 2000 is down about 0.6%.
Okay, what do we know? In January, I predicted in this time period between Canada Day and Bastille Day, we would top out in the stock market. Okay? Then we had our decline. Now, it was exacerbated or accelerated by the unwinding of the yens, which again is normal, and I track that today in QuantBox. Okay? Nobody sold. Nobody sold the yens. But the yen got, yen pairs, I should say. Another way of saying it is the yen got strong last week dramatically. I made 2,000 pips in less than 2 weeks, like a week and a half. I made 2,000 pips on one trade. I didn't compound. Just the pound yen. I didn't sell all the yen pairs. No, just one little trade. Okay? And so you're like, wow, okay. But statistically speaking, nobody actually bought the yen, even though it got incredibly strong. So what happened? People deleveraged and paid back their loans. Much different. But it arrived on time, accelerated by a couple of different things. In particular, this period here was massive recession fears. Okay. But let's get back to technical analysis. Okay, lower low. Oops. Let's do it. We'll do it this way. Okay, lower low predicts the lower high.
And just
lower
starting
low
off with a rundown at the cash open. US indices do open in the red. S&P is down about 0.3%. Nasdaq down about just over spot 1%. And the small cap Russell 2000 is lagging behind, down about spot 7%. Sectors do open with a downward bias, with energy the clear outperformer, helped by rising oil prices, while real estate and consumer discretionary lags in the red. Elsewhere, treasuries and the dollar are flattish, with havens continuing to retrace the gains they did incur in July. Dollar yen does climb to above 148, while the Aussie and Kiwi outperform in the G10 space. Meanwhile, the crude complex is firmer amid raised geopolitical uncertainty over an Iran retaliatory attack. And looking ahead into the session, we will see the New York Fed's survey consumer expectations and the US federal budget.
Cool, huh? It's kind of cool to listen to somebody, right? All right. Down, 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 up, up. Buy or sell? Down, 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 up, up. Buy or sell?
And just an update here from the Bank of England, does get a bid to cover ratio of 1.84 times, an auction of 800 million sterling of gilts with a maturity of 3 to 7 years.
Okay, so here we are, down, 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 up, up. Buy or sell? Okay. Now, we don't want to become bulls until we get a reversal pattern like a double bottom or a higher low. Bank of England sells 800 million pounds of 3 to 7 year gilt. Bid to cover ratio way less than 2. 2 to 1. Hey, it's pretty cool to have this squawk, though, isn't it? Okay. Yeah, it's pretty cool. Yeah. Okay. So if I can get 100 people, I can negotiate a deal that would shock you. But I need 100 people to contribute a reasonable amount of money. Cool. That's all. And like I said, I had Squawk for 10 years. I'm telling you, I love it. But it would be integrated into TRADARS, into our research and analytical platform for fundamental and technical traders. Coaching, coaching, courses, and community.
And folks, just a quick market update. The desk has in recent trade been asked a few questions about the stock market and even bonds as well. Again, we're not seeing anything particularly headline positive. We do note that the tone of trading in Europe was positive after a holiday-thinned session overnight in Japan. Additionally, there's not really too much on the slate today, and we are just seeing a bit of a continuation of the firmer risk environment over here. So we are seeing a big one for the bond complex. We are just seeing that continue to just fall. In terms of specific headline drivers, not really seeing much at all at the moment. It is a thin day. We do have some data from the New York Fed in around about 1 hour, 10 minutes. The survey of consumer expectations. But other than that, there's not too much on today's radar ahead of some key events this week, which does include the likes of PPI, CPI, as well as retail sales on Thursday.
See? I mean, dude, super cool, right? So what he's talking about is, let's say you've logged into TRADARS, and I'm paying the licensing fee, which is quite expensive, but understandably so. But imagine now this is integrated to TRADARS and you had a question about the news, or what does the bid to cover ratio mean? You know, you have a question, you can ask their analysts. You can talk to them. And that's what he's saying. So you got quite a bit of questions about why is this happening, why is that happening, and they responded. Now, usually they would just respond by text. But this would be your team integrated into TRADARS. I mean, cool, right? Okay, so anyways, let's take a look at the smaller time frame. What do you think about that? Huh? Maybe that giant pink arrow? Yep. Now bulls are getting ready to do their thing on this time frame, because we have this. You see? So, okay, stop chasing waterfalls, right? If you're a bull, you're getting ready to buy a dip. If you're a bear, okay, you're setting it up. The thing is, if you're a bear, you know that you have a pretty decent chance of, oops, let's do this different color here. A pretty decent chance of, like, you know, a swing out of this. Okay. South African Rand, I think, does a pretty good job, Jordan. And of course, part of the correlation is negative correlation, right? So if dollar's weak, gold very often goes up. If dollar's strong, gold very often comes down. Okay? So decisions need to be made. Is this the bottom? Could be, Rabbit. I don't know. Is this an important price level here? Yeah, probably. Where we are now? Yeah. Yep. We can now zoom in and look at the daily. Okay. And what would I do as a daily trader? Now, who trades the daily chart? Amateur, right? Otherwise known as retail? Or institution? What would a swing trader do? In fact, why don't we even adjust here? And let's go into my indicator list and get rid of annual. We can look at monthly. Okay. There's the counter trend trade. Very, very obvious. And then we bring this back up. Let's look even smaller time frame and get closer to the here and now. Okay. Okay. If we're swing traders, there's only two scenarios. Okay. This is a trade, and the best time of the week to take that trade is a Monday. The second one is this. And what about that one if it happened Thursday or Friday? Okay. Well, this is wrong. This is correct, and this is correct. So it could go up for 2 days, sell it. Why? You're a bear on the daily chart. Or it falls now. Why? Because that's a bearish swing trade on the 4 hour, and you're already a bear on the daily. Yeah. Neat, right? What I think would happen if we went higher first. So if today ends up being a bullish day, let's do this in yet another color. I think what would happen is we kind of go like this. We get all rangy again while we wait. Okay, what's the biggest news event of the week that could change the direction of the NASDAQ? Oh, we only have 2 people right now? Everyone else has broken fingers? Oh, I don't type. PPI is only interesting if it predicts CPI. That may or may not be true. There we go. Mikhail's nailed it. CPI on Wednesday, retail sales on Thursday. Yeah. So we're likely to lose volume and volatility around that, but, well, we'll see. So if you're swing trading, the best day of the week is usually Friday or Monday. I hope you know that. Fridays are for entering Monday's trades. I want you to think about this. The swing trading group meets on Thursdays to do technical analysis of the following week. What does that mean to you if you're not in the swing trading group? You're showing up here on Monday and you're already falling into our trap. We're already done. What the heck are you talking about? We planned it on Thursday. We knew it on Friday. We knew it on Saturday. We knew it on Sunday. We know it on Monday. And everybody else is just trying to figure it out now. Okay? Yeah. Yeah. All swing traders and day traders will be moving over to TRADARS in the next couple of weeks. Yeah, baby. Yeah. And like I said, day traders are going to get a lot. A lot. And swing traders will get it, everything they get now and a little bit more. Day traders will just get a lot more. Why is that? Well, I want to incentivize you to become a day trader. But if you're like, man, I'm still learning the ropes and I'm doing this really for some feedback and some performance coaching and to get an overview of fundamentals and an overview of technicals, and I need help on implementing the techniques I'm learning in the training course, then swing trading's great. Oh, yeah. But if you the next level up is not just learning it, but learning to do it and then doing it, right? And so, oh my God. It's going to be epic. By the way, that's news. That the little cha-ching, that's news coming in on the news platform. See, here's a little summary. It's a 1 minute quick and dirty, even really just 30-second quick and dirty. You don't need 9 pages to feel complete. Okay, it's nice, right? USD relatively flat to kick off the week within a tight range. This week's focus is on inflation data. Dixie hasn't broken out of Friday's range. Analysts at ING suggest that U.S. inflation data shows no surprises. The Dixie might stall near 103.5 before declining. Okay, which would be stock market up. The ongoing Russian-Ukrainian tensions, especially rising European gas prices, not gas, by the way, could still support the dollar. Okay. Euro overview, pound overview, yen overview. Okay. So anyways, cool, right? I mean, nice, quick and dirty. This is all being done for you. Nice. All right. So anyway, so there's that. Let's move over and do some foreign stocks as we get ready for that close in a couple of hours. Just double check the clock here. When you go to full screen, 54 minutes until the next news event. So we're good until 11 a.m. and then we have some Fed news. Good to know. Okay, I already pointed out Hong Kong. Okay, and I pointed this out, well, you know, I don't know, a week ago, I guess. You know, that we are one standard deviation below the mean in an uptrend. So now we have two levels of support. Or I should say, well, yeah, actually it is support, but support becomes resistance, right? All right. So when you're below support, support is resistance. So a trend trader is going to say, if the trend is going to continue down, as it has been for a long time, then this is what's going to happen next, right? Favor says only use monthly, weekly, daily. All right, so you're sort of a swing trader, position trader. Perfectly fine. You'll do very well.
Just for the Mexican peso watchers, the central bank governor Rodriguez says headline inflation shocks should be transitory. It's according to an interview in El Financiero.
All right. How many people here, however, are bullish on global macroeconomics over the next week or two? How many people are risk on? The Fed's going to cut. We'll get certainty on the election. America's next year is going to be booming. Global trade resumes. How many people are waiting for this to turn risk on? Statistically, this is the right time. We don't know if we have the fundamentals to back it, but statistical analysis. Okay, no one? China tariff. Well, if you're worried about that, then you're thinking Trump is going to win. If you're not worried about that, I don't know what the Democrats think about it, because Joe Biden was president for 4 years and did not adjust the Trump tariffs at all. So I don't know where the Democrats stand on that. Joe Biden did nothing. But the theory is, if you think Trump's going to win, most likely they will raise tariffs. And that could be a position. Okay. But let me get to what I'm trying for. You can try to anticipate the change of direction. Now, we already know what is. This is, or what has been. This has been falling. The technical analysis is easy. It's very basic price action, and it's worked. But we are now statistically at the bottom of an uptrend, statistically, not technical analysis. This is just one standard deviation below the mean. But when you do the the rise over the run, it's a positive integer. So it's bullish. Okay, great. So maybe it rebuilds, and maybe the cuts, and maybe this other thing, and maybe there's a recovery, and maybe it was overblown that we were going into recession, and maybe NFP will be revised higher, and maybe the SOM rule is full of nonsense. Okay. I just want you to decide. And if we had a conversation about it over dinner, you can give me all those maybes. And I'm sure you can back it up with some sort of facts. That'd be great. Cool. I don't care. You have to understand, I don't care. When I meet with my buddies who are professional traders, I don't care if we agree or disagree, honestly, and they don't care if they, but we talk about the why, and that's the part of the debate. We're not even, it's not even interesting what we think, it's how we got to the conclusion. And that's where you're like, oh, snap, dude, that was smart. Okay? I had somebody, we were having a conversation to just kind of prove the point, because no trader is perfect or even close to perfect. And we're much more interested and concerned about being wrong than being right. Because every time you make a trade, you assume you're going to make money. So it's not interesting. Now, if you have an interesting win, it's because you over leveraged, most likely, and you gambled somehow. And sometimes that gets done, but we all know it's dangerous. Trust me. It's way worse when you lose. You have to call all your clients and say, I lost 5% of your money. And they're like, what? Okay. And they never trust you again. And even if you recover it and everything's good, a year and a half later, you're down 1.5%. You get phone calls. And they're like, you're a jerk. You're going to lose another, 5% of my money. And you're like, whoa. Right? And there's no forgiveness and there's no forgetting. So it's not about making big money. It's about making consistent money, right? So anyway, when you're right, you know you're right. That's why you took the trade. So when we have conversations, what's much more interesting trader to trader is how we figured out we were wrong. And in his particular case, we were talking about either annual pivot points or seasonality. I can't remember. And he's like, dude, right? And he's like, oh, I can't believe I missed that, right? I'm like, it's hard to know everything all the time, right? But my point is, you never know you're right, no matter how smart you are, but you have to have good plans. So if this is going to turn bullish, all we know statistically, this could be a turning point. Has it turned? No. What could turn it? Well, maybe those Fed cuts, maybe CPI comes out differently than expected, or, it's a great CPI, inflation is down, great, but retail sales is up, somehow it's just all good. Well, we need a double bottom, higher high, higher low before you can giddy up back on to the uptrend. We're not quite there yet, but you could be prepared. And the only way to be prepared is you're ready, willing, and able because of your preparation. Now, you don't know if it's going to happen, okay? But you set it up, okay? Where would the stops be? Okay, lower low, okay? Now, you could put it here or here or here or here. Each one is further. What I like to do is up, down, down, okay? Let's say I bought that one. I don't buy that one, okay? So now I buy this one, and it goes up, okay? Down, buy the second one, but the first one's profitable. And then when we make a higher high above this, okay, I move the stop. So this one I'm not in because that's a one touch. That's not a reversal pattern. Okay, the higher low or double bottom, I buy that, move it up here, and then a break, okay, move it to break even, and now nurse this one through its pullback and increase. And then I can move this one to that entry, and then this one. So now I have one extra profitable, right? And the second one at break even, and I can stack them and back them. But you can't be a bull if it's been bearish and it hasn't given you a reversal pattern. How could you possibly know it's going to reverse if you haven't had a reversal pattern? Well, you don't, therefore you guessed. And if you guess, you're a gambler. And if you're a gambler, you're going to die broke. Somebody with an edge will always beat you. And not only do they have an edge, they got more money than you, so you're short stacked and naked. And for some reason, you're not afraid. You're detached from reality. Those three things are not valuable. Those three things destroy value, huh? See, look, I'm not trying to talk you down. I'm not trying to belittle you. I want you to survive. I want you to build a sustainable business. Okay? You're not just a businessman. You're a businessman. Okay? And to do this for the next 20 or 30 years and build a small fortune, okay, you need to have something sustainable, and that is low risk, consistent returns, and knowing when to let your winners run. Okay?
And folks, again, just to point out, we are just seeing equities bounce back now from that dip that we saw in recent trade. Again, we didn't really have much to explain the way down, and there's not really too much to explain the way up. In terms of headlines, they are just pointing out that the VIX has slipped below 20, lost at around about the 19.7 level. Other than that, not really been too much headline driving the recent moves that we've seen in the equity complex post the US Open.
Let's do commodities, eh? Wow, 9 minutes, huh? Cool. All right. Gold has caught a bid. Okay. I've been a bull since the end of July. And it still hasn't paid off. Look, everybody, there's no trend. Whatever you're doing right now, you're trading blind or you're trying to predict the future. Just realize that's what's happening. Now, remember, on the news Squawk, the guy said, well, we couldn't really figure out why the stock market opened down, but now we can't really figure out why it's recovering. Now, they're watching the stock market and they're like, there's no news to really make any of this happen. I agree with that. In fact, there's nothing going on daily or weekly right now. And that's looking at 1 billion options contracts. And I said that with a B. 1 billion options contracts. Okay? The value of the yen. Long-term treasuries, the stock market, the dollar, short-term treasuries, gold, VIX. Nothing is happening. So like when we go back to that original on hell question, you're like, man, I've been trying to buy dips and do multiple time frames and catch the daily and do a 33.99 OCO and not getting consistent results. Dude, this is why. You have to know when to hold them and know when to fold them. Okay? Now is not a good time. And this is seasonal, but dude, we're looking at 24 variables. Okay, we're looking at 8 markets on 3 time frames. And the general consensus is nothing's happening. Good to know. But what I'm trying to get to is I want to go back to gold. And we go here. I believe it's gold and not XAU. Gold. Okay. And let's go back. So QuantBox, now TRADARS Economics. It's going to be TRADARS Fundamentals soon, but TRADARS Economics. Look, we know going back to the 13th of July, it's been bullish, non-stop. Now there's a bit of a dip economically. This is not technical analysis. This is, in fact, only a very small part of it is price time data. But we're looking at a lot of things, and it did pull back and then went up. Hey, that's a lot like the technical charts. Oh, yeah. But let's go back a little bit in time. Uh-oh. I moved that, and I hope I didn't break it. I might have broken it. No! I broke it. A to Z, we don't care about that. I'm trying to change the time frame. Oh, sorry, that's my bad. I wonder. Oh, good. All right, let's do. How should I do this? Let's go back to here. Let's go back to May. May 1st to today. This is the economic score for gold. That's why I call it the back tester. We can go back in time and you can check to see if QuantBox is bullshit or legit. Okay, we're loading the data because this is a database that we're manipulating. We just did a query to the database. Oh, snap. I need more coffee. Hey, look at that. I need more coffee. Okay. What's up, Heavy D? Okay. Check this out. Going back to May 1st. Okay. The black line is the price of gold. Okay? The bars are the score that QuantBox has given. And by the way, I'll adjust this, but you can still go full screen. It's just a little quirky. I mean, this is gorgeous, right? Like, shut the back door. So on May 1st, gold was a -2. And on May 3rd, it went bullish and has stayed bullish the entire time. Now, people log into Forex.Today and they're like, what do you think about gold? Well, that's what I think about it right there. Okay. Yeah. Cool. Cool. So way back a couple of weeks ago, okay. By the way, we had scores like 12 and look at drive gold up. See, when it was a 12, we were here at, 23. Okay, 2,300, and then it went up to like almost 2,500. Okay, but notice the score was falling, and somehow somehow, based on macroeconomic analysis, somehow QuantBox already had it dropping before it dropped. I know it dropped. Interesting, huh? The macroeconomic fade had already begun. So how do you put that into context? Well, imagine you were looking at your technical charts, and what if this was the pivot profit zone? So down here you bought it, and this is your target. And meanwhile, what you see here is less and less reason to buy it. So somehow, it's like buy, take your profit, get out. Okay? So anyways, they're not perfect overlaps, but they're very, very helpful. Okay? Very, very helpful. So now you know, like, the context, for example, of like, how did I get to this number? Okay? Remember, I drew this when we were up here. Can anybody confirm that? That I drew the arrow when we were at X, which is that projected high. Do you remember? That I just showed you. The projected high, when we were down here, QuantBox was giving a 12, I think it was. And then we topped out here. So then everything collapsed on us. But I'm like, okay, we're way up here. The moving averages are way down here. So I went through and I tried to predict where that would be. And I did things like I looked at this and I looked at this. And I'm like, okay, that's where the moving averages will be in the future. And look, was it easy money? Did you instantly get rich? No, you had to sit on it. And we're still sitting on it. And we're still sitting on it. Okay, but the idea is if you watch it and it goes up here, what happened? Well, I guess you didn't anticipate a Fed cut. You didn't, for example, right? So you waited for it to happen and then you're too late. So this is why it's important to have fundamentals that will help you predict the future before it's happened and be ready, willing, and able to act and pounce. So it's all about, like what I've been teaching for years and years and years and years at Investor Bootcamp and before that FX Bootcamp. It's all about ambushing, setting up traps in advance. So when you're here, you're waiting to buy here. Okay? If it doesn't make a higher high, you're range bound. What do? Buy the bottom. It's a range trade. Now, if it breaks out, okay, then we're going to buy here. Okay, QuantBox score was never bearish, so there's no sell. There's no selling. There's only buying dips or buying dips and exiting at the top of the range. Okay? Abdullah wants me, should I sell it? Should Abdullah sell his gold? I don't give financial advice unless I have a fiduciary responsibility, meaning you've hired me. So I can make that determination for you, sure. But you'll have to hire me and pay me. Now, one process that you guys should be doing is this process where, okay, I know it's hard to see here because the score is 10. But you can go to the scorecards and pull up gold, for example. Okay, and there's 10. Okay, cool. So every day in your process, you want to do this mechanically because the process is important. So you never just get lost. You always know. Okay? And so over time, like at one point, QuantBox was a 6. I know that because I documented it. But today, QuantBox is a 10. And so if every day that was part of your process, then you're mentally connected always. And so we went from 6 to 10, so you're definitely still a bull. Are you going to sell the triple top? Bulls don't sell tops. Okay? If you thought it was going to be a top, you're not a bull. You're ning cow poop. Okay? So if you're a bull, oh yeah, this is your plan. So here's the thing, guys. Do we know that that's going to happen? No. Is this perfect? No. I know I sound confident, but there's a difference between confidence and arrogance. And we kind of talked about this indirectly or directly, but I was asked during the QuantBox session where I'm like, we know for a fact what the Bank of Japan, has planned. And so I was challenged a little bit, I think. It's okay. Like, whoa. But they can change their plan. Yeah. But if you don't have solid footing as a base, then, all of a sudden, they can always do anything. Well, it's hard to make decisions around that, right? So we know what we know, and we know how they got to the conclusion, because, again, QuantBox tells us what they predicted in inflation. So if their inflation is different from what they predicted, then maybe we can make our adjustments in anticipation of them making their adjustments. But at the end of the day, we know what they have told us. So if in this case, what I'm saying here is you never know what's going to happen, but you should absolutely know what what you're going to trade and why. Right? You need to know your intentions. So I don't want to come across arrogant, like I know what's going to happen. There's a difference between ego and egotism.
Metals watches, the London Metal Exchange says the suspension of primary nickel brand Impala nickel has been lifted with immediate effect.
Okay? Okay, ego and egotism. Ego is your inner fortitude and strength based on experience. Okay? You have to have an experience. You have to have earned the confidence. So I know exactly what I intend to do. And I can back my truck up. Okay? I can back my truck up. Yes. But if this happens, I'm out. So we call that strong opinion, weak conviction. I know how to be wrong. And when I'm wrong, it's beautiful. Okay? Yes. You want to avoid ugly losses. I don't have ugly losses. I have beautiful losses. Okay? So if I buy a dip after a higher high and it falls, oh yeah, dude, not a problem. Like if I bought here after a higher high in a macroeconomic uptrend, technical uptrend, no matter what you want to measure uptrend, and I buy a higher high, higher low and lose, it's okay. Nobody's going to yell at me. Okay, maybe I missed an annual pivot. Maybe something changed at a central bank somewhere. Some central bank starts dumping. Well, that's not technical and that's not fundamental. They're probably trying to manipulate their currency, and we'd have to go figure that out. But if I lost a little money, don't cry for me, Argentina. Everything's going to be fine. Okay? But if I'm a bull, there is no resistance. And if I'm a bull, I'm not going to sell that under any circumstance. Now, if I was a bear, I would look for that Plus QB would go negative on us. And there we are. But QB is a 10. It was a 6. Bro, it's aight. Okay? And remember, Quantbox right here went bullish. Remember, I just showed you. I just dynamically pulled up the database through query. Okay? Cool. Up to the top, define the range. Okay? Down to the bottom, define the range. Okay? Mediocrity. Okay? Higher high. This is what I did. I'm just repeating now. Higher high. WWWD. What would Wayne do? Remember, the moving averages were way down here, but I had a QB6. QB6? Oh, I'm going to buy a higher low. Where's that? Well, it could be here, and you can see I've marked it. But probably down where the moving averages are. It's the best I could guess at that time. Okay. And now we have a new range. Okay. And maybe we get one of these then. Okay. But if in 3 weeks QB is a 2 and not a 10 on this asset, something is changing. And remember, very little of Quantbox is technical analysis. Well, actually, technically. In truth, there's no technical analysis in Quantbox. Okay? This analytical process here is statistics. It's not doing what TRADARS does over here, which is patterns. This is not technical analysis. This is statistical analysis. So we're just doing trend projection. That's stats. Okay, that's it. Statistically, this is bullish. Okay, that's that. Same with this, under price forecast. So now if you're bullish on gold, let's say I can accept that. Oh, sorry about all these little things. It's because we use tools on top of the Google Cloud. But anyways, okay. If you want technical analysis, TRADARS does that. Okay. There's Forex for you, but what we want is commodities. That's silver. Okay. If you want to really get in there. I think these are new crosspairs, aren't they? They added them. Nice. Nice. They didn't add everything. Look at that, everybody. We got some new crosspairs. And a stock. All right, we'll add that. And can anybody read that? USD, what? I can't read that. Can I zoom in? So they added ZN for us. DAX, Dow, FTSE, Nikkei. I guess that's NASI. Oh, we got NASI. All right, prices just went up, everybody. Prices just went up. Yeah, cool. Cool. So we got, what, 5 more currency pairs? A stock. I don't know why. I didn't ask for that. And then we got some NASI. Cool beans. All right, what was I doing, though? I wanted to say, okay, just tell me gold, because we're talking about gold, right? Oops. Let's get rid of all of them and say, only give me XAU when I'm on the commodity tab. And 4 days ago, you got an up in an ascending triangle. Sorry, bro, you missed it. We're about halfway to target now. Now, remember what TRADARS does. Okay, notice the new link URL, technical radars. So we have, these names are going to change here, but we have technical radars, fundamental radars, scalping radars, volatility radars, so on and so forth. Okay, but okay, is this a prediction? Wayne, TRADARS predicted gold will go up. No. There's an ascending triangle. The ascending triangle pattern says up. So TRADARS, Wayne says gold will go to 2473. Is that right? No. In the ascending triangle that TRADARS has noticed on this time frame, that the next leg will end at 2473 because it's a pattern. It's not a prediction. It's not going to tell you what to do because you can't figure it out. No, it's your job to figure it out. So what do we know about the pattern? Okay. So then it had a down leg 4 days ago. It told you to look for up, so it went up. Oh, you missed it? Okay, well, that's you, man. That's on you. If you missed it, you had a machine doing it for you. You're like, well, can't watch all those time frames. Well, with TRADARS, it watches 7,500 time frames. So now you don't have an excuse. You know everything on every chart on every time frame, or you simply don't know. Okay, so now you got this move. So 4 days ago, so Friday, we are at the bottom of an ascending triangle. So it said the next wave is up. That's how you traded an ascending triangle. Meanwhile, you're getting kind of like top, 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 but higher, low, higher, low. So what will TRADARS tell you up here? Well, there'll probably be a down, but the down will be slightly higher than the previous low. So higher, low, higher, low, higher, low. And as you get closer and closer to the apex, the probability of a breakout to the upside is significantly higher because, well, look, we're in a technical uptrend. But this part of TRADARS doesn't talk to the fundamental side. And this truly isn't statistics. This is truly a pattern. And therefore, you as a trader can say, well, at least we have an uptrend pattern. I want to buy dips. Okay, I want to buy dips. But also then you open your chart and you see that way up here, maybe 27,050, there's some sort of resistance. Like September monthly pivots or August monthly pivots or something, right? Or there's an annual pivot up there. Well, you're now the boss making decisions and you're like, well, that's my projection. So every time it makes higher lows, you buy more and you buy more and you buy more and your actual target is here. This is not a target. It's the end of the next wave. It's not going to make you a millionaire. If you can't make decisions, you're not worth $1 million. So if you're going to create that kind of worth, you need to make intelligent decisions. And that's what this platform is You see how beautiful it's becoming? It's cray cray. It's cray cray. You are going to trade like an institutional trader. Mark my words, you're going to become pro. Okay? Wayne, what's going on in NASDAQ? Oh, oh, you missed it 15 minutes ago. Okay? Interesting, though. Look at that. Maybe suggesting a pop and drop, huh? Check this one out. Okay, NASDAQ is recovering. Oops, I wanted to use the arrows. NASDAQ is recovering from the big drop. Okay, made a higher low, slight higher high. So we have a rising wedge. Okay. And what? Down? So that means sell, right? No! Did you miss the rising wedge part? So what? How do you play it? Buy it on the higher low, bro. Okay. Golly. Go just. Dude, this is crazy, isn't it? Look at the Dow. Whoa. Whoa, bloodbath on Dow, so we don't even have correlation. You guys trade the crypto? You like it a crypto? ETH, man. It says down, right? No. No, it doesn't say down. Well, there's a down arrow. Uh-huh. What would you do if you were a bull? ETH. Okay, Litecoin, Bitcoin. Cool, right? Channel up. Breakout. Okay? This is why I don't trade those. I want you to be clear, or I want to be clear. I buy dips in up channels. So if it breaks out, well, I'll catch you when it's a down channel. Do you see how simple this is? Oh, but it broke out. So what? What do you care? On a 15-minute chart too, huh? Okay, you're all over the place. If I'm going to sell this, it'll be a down channel. So if it breaks out, I'm like, I don't care. I'll catch you after the lower high. So all I need is for TRADARS to say channel down and show the lower high. And have those little dots going beep, 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 creating a lower low. Okay? Great. I'll see you then. No, I like it all, Al. But the best money is made swing trading. Yes. The best money. For sure. Okay? But I could battle on a 1-minute chart. Oh, yeah. But the thing is, if you don't know what you're doing, on the long run, you'll never be wealthy. So let me put it this way. Can you get rich scalping? Sure. Assuming you're good and all that. But yeah. Do people make a lot of money scalping? For sure. Not many, but you certainly can. Great. What happens when they go on vacation to spend all that money? How much money do they make?
So we have around 10 minutes now to the top of the hour. And from the New York Fed, we will be getting the latest survey of consumer expectations, which comes ahead of tomorrow's PPI and the CPI data due on Wednesday. Just a reminder, the June survey of consumer expectations data showed 1 year ahead inflation expectations falling to 3% from 3.2. The 3-year was up to 2.9 from 2.8, while the 5-year fell to 2.8 from 3.
So we had news at the top of the hour. We'll get the news and then we'll call it a day. Is that all right? So please answer the question. You make a lot of money, you're a scalper, you have fancy watches, fancy cars, you have an exciting lifestyle, everything's great. So then you grab a good-looking person and you jump in your private jet, you fly to the Caribbean for a week. How much money do you make when you're on vacation? As a scalper? None. You are by definition poor. If you're a lawyer and you charge $500 an hour, but you go on Christmas break, how much money do you make? None. You are poor. You trade your time for money. Okay? Your most precious, scarce resources, right? You trade. Now, lawyers make a lot of money, so they make the trade for significant levels of cash. There's no doubt about it. Most people that trade their time for money, they have more time than money. So you're flipping burgers at McDonald's making $12 an hour. Like, no, I make 13. Dude, $13 an hour. Okay? So you have a lot of time, but you ain't got no money, and people won't pay you very much money for your time. And it's a circular problem. No matter what happens, you stay poor forever. Yeah. So you might be in a situation where you're a scalper and you make a lot of cash, but the minute you stop trading, you make nothing. So now when you go away, there's a cost. You're like, oh yeah, you can go on vacation, and yes, your hotel is $1,000 a night, or the boat is $10,000 a night. And then you're going to spend 10 grand per person flying out there, so 20 grand and all that. So you're going to spend 100 grand on vacation, but you might also lose 100 grand on vacation because you're no longer trading. So now you're like, you were rich, but it costs you a lot of money to stop digging in the coal mine. Okay? Up, down, turn around, pick a bale of cotton. That's your life. And that's assuming you're good. What about the periods of you work your ass off and lose money? Now it's a double insult. Oh, and you don't have paid vacation, you don't have benefits, you don't have a retirement account, all that kind of stuff, right? So anyways, in all honesty, it's a great way to make money, but it's not a great way to get wealthy. How do I distinguish between rich and wealthy? When the Fed cuts interest rates, I anticipate the value of my home will go up 20%. It's not a trade. I own. I'm invested. I make money while I sleep. I have a retirement account. And I have secondary accounts. And I have joint accounts. And I have play accounts, fun accounts. I have taxable accounts. I have rainy day accounts. So I'm lucky. It's not luck because I worked on it for decades, but I own a lot of stuff because I'm an owner and I'm invested and I have all these different accounts. Cool. And all those accounts make money while I sleep. Cool. And when you do things like swing trading and position trading, okay, Al, I'm in the trades anywhere between, 3 days, 3 weeks, 3 months. And I can wake up and find out I made 300 pips while I was sleeping. Huh. So I could create a little portfolio, go on vacation, come back and have made money while I was drinking margaritas with my mamacita. And a scalper is losing money every day. And trust me, I've been in the position. I'm talking about myself. I've been there. I've done that. And you get to the point where you make a lot of money, but you can't afford to go on vacation. You see? The cost of doing business is too high. Your vacation costs twice as much as mine. Because I'm an owner, and if you make money while you sleep, you're wealthy. You don't work for money. Your time and your money are disconnected. Think of it. Completely the opposite. Your compensation, or compensation is equal to value, let's say, right? Savings is equal to investment, compensation is equal to the value, and my value is not attached to my time. Much different play. Okay? So if the only thing you do is scalp, sure. If you're really good and do it over long periods of time and you already have money when you start trading, yeah, you'll be able to lease a Lambo. That'll be great. You can drive around with your Lamborghini. The problem is you won't have any time to do so because you'll be busy working all day, every day to pay off your Lambo lease. You got to hit your $5,000 for the month just to pay for your car. And well, hell's bells, you've had 3 or 4 bad days in a row. You got really unlucky. I didn't see the unwind. Right? I bought dips and got crushed on the yen unwind. Well, nobody gives 2 hoots. You were buying dips on the way down. F you, pay for the Lambo that you leased. Meanwhile, if you owned a house, the Fed's just about to make you hundreds of thousands of dollars and you don't do anything. The house hasn't changed. You don't do anything. You didn't change the windows or the doors. You didn't paint anything. The Fed cut interest rates. The amount of buyers go up. Inventory's low. The value of your house went up and you did nothing except snooze and get wealthy. Even oddly enough, like a watch like this, this is a Rolex. I find these things laying around. I just found this the other day. No joke. Never even used, not even once. I know you can't really see that. It's a leather watch band for my Rolex. And it's a Rolex watch band. I mean, dude, these are a lot of money. And I just found them laying around. I bet you some of these things, like the watch itself, sometimes these things go up in value. It's really strange. You're just laying around and you're like, it's worth more.
According to Bloomberg, Starbucks near a pact to give Elliott a board seat. So they are reviewing their capital allocation and their operations. And that's Starbucks after the activism that was announced over the weekend. It's another activist in Starbucks, it's worth noting. Starbucks reportedly noted to near pact to give Elliott a board seat, according to Bloomberg.
So anyways, you need to be an owner if you're going to be a boss. You need to be an investor.
30 seconds to the top of the hour. We'll be on the lookout for that New York Fed survey of consumer expectations.
Isn't this exciting? 14 seconds to the news, y'all. How about that one? That's a nice one, huh?
It's not seen the New York Fed data just yet.
Fed's late. I told you. I did not make friends at the St. Louis Fed. They hate my guts. Yeah, Jimbo, that's exactly right. Unless you sell your business for profit, or, you know, you're able to build enough staff that you can hire managers and all that, right?
And the 1 year unchanged at 3%, 3 year falls to 2.3%. So that's down to 2.3%. That's versus the prior 2.9. Meanwhile, the 5 year unchanged at 2.8. So that's New York Fed survey of consumer expectations. The 1 year inflation expectation is steady at 3%. The 3 year sector, that falls to a series low of 2.3%. That was versus 2.8% in the prior report. I beg your pardon, 2.9% in the prior report. And meanwhile, the 5 year gauge, that's unchanged at 2.8%.
Cool, right? Neat having a squawk, isn't it? Yeah, it is really neat having a squawk.
Just a bit more commentary in the report. NY Fed says delinquency expectations increased, with the average perceived possibility of missing a minimum debt payment over the next 3 months rising 1 percentage point. That's at 13.3% now, the highest since April 2020. Meanwhile, for labour market expectations were mixed. The NY Fed says respondents' median 1 year ahead expected earnings growth declined 0.3 percentage points to 2.7%. However, the report adds the mean expected likelihood that the US unemployment rate will be higher 1 year from now decreased by 1 percentage point, taking that to 36.6%.
Okay, we're up across the board. Because I'm an owner, I'm making money, didn't have to scalp it. I already own it. So, but ultimately, I want you to have a healthy understanding of scalping, spot trading, day trading, intraday trading, market open trading, news vol trading, swing trading, position trading, carry trading. I want you to know all of it. And everything will be offered to you. Okay? So, no matter what you want to do, I want you to be well-rounded and holistic. And you can make investing decisions as well as trading decisions. Yeah. And for that, you're going to need to be excellent at fundamental and technical analysis, but also have the trader psychology, skill, and ego to actually carry out your strategies technically proficiently. And I'm on your side, baby. We're going to do it together. Okay? TRADARS, TRADARS, TRADARS. Peace on earth. May the pips be with you. May your profits be above average. Thank you to Traders Way for providing such a great platform. Remember, guys, you want an ECN. They're mine, baby. TradersWay.com.